Ladies and gentlemen, good morning, good afternoon, and good evening. This is my word. Welcome to the World Business Angel Investor Week 2024. The upcoming World Business Angel Investor Week, scheduled for June 17, 23, 2024, aims to explore the significance of diversity and inclusion in entrepreneurship. It will also delve into strategy for entrepreneurs to collaborate with a variety of stakeholders, working towards the creation of more supportive and equitable business environment. This week-long initiative provides an open forum for connecting, learning, sharing, and showcasing invention and innovation, and exchanging knowledge to advance entrepreneurship, innovation, and angel investment ecosystem. It is celebrated every year under a global theme. The theme of this year, 2024, is fostering diversity and inclusion in entrepreneurship, building stronger business ecosystem. This week, we'll be hosting more than 200,000 delegates from 132 countries, and I'm honored to have been nominated for the third consecutive year by the executive chairman of WBAF, Baibar Altuntas, as chair for Italy as a senator of the WBAF of the Business Angel Investor Week. The WBAF asserts that building stronger business ecosystem with a focus on diversity and inclusion is a shared responsibility. Entrepreneur, investor, governments, and corporation all play pivotal roles in creating an environment that everyone has the opportunity to succeed. Through fostering collaboration and implementing inclusive strategy, we can cultivate a thriving entrepreneurial landscape that mirrors the diverse tapestry of our global community. The World Business Angel Investor Week, globally coordinated by the World Business Angel Investment Forum, WBAF, an affiliate partner of the G20 Global Partnership for Financial Inclusion, serves as a platform for stakeholders to pause and reflect on their rapid journey. Additionally, the week emphasizes how entrepreneurial ecosystem can generate more jobs, wealth, and social justice through collaboration with key players in early-stage equity markets. In today's rapidly evolving business landscape, the need for diverse and inclusive entrepreneurship has gained significant recognition. The key to fostering an environment where entrepreneurs from diverse backgrounds can flourish lies in the development of a robust business ecosystem. It seeks to analyze the reason and method for leveraging smart finance as an essential financial tool for economic growth. So, today, our program will be, after my short introduction as a keynote speaker, the video message of the global chair of the World Business Angel Week, Baibar Altuntas, executive chairman of WBAF. After, we will have another keynote speaker, Enrico, managing partner of 3 Dots, and the title will be Unleashing Market Potential, How 3 Dots Capital Advisor Transform Mid-Market Enterprise into Global Competitors. After Enrico Caporin, we will have Giovanni Campodall'Orto, key account of Run Capital Partners, that talk about the age securitization, how transform from liquid to liquid some financial instrument. We have another keynote speaker, Matteo Bodini, that is in charge of legal and compliance of another company in the UK, that we talk about the opportunity of the investment corporation in the UK. Following this, we will have a roundtable with the title will be Investment Certificates, a tool for navigating market uncertainty. And the moderator will be Marco Falzarella, an analyst of Run Capital Partner. And we have the panelist, Mattia Donà, the key account, also Marco Falzarella, an analyst, and Davide De Luca, another senior analyst of the company. After this, we'll leave the stage to the Borderless Smart Fundraising for Venture Capital, where the panel speaker will be Mino Guastamacchia, Bound co-founder and CEO. And the other panelist will be Luca Padovan, CEO of Run Capital Partners, and the moderator will be Elena Bernardi, marketing specialist. And at the end, we will my final remarks and thought for the next year. So thank you so much to be here today. And I leave the stage directly to Baibar Altuntas, Executive Chairman of WBAF, with his video message. Thank you.
Dear presidents, ministers, entrepreneurs, innovators, and angel investors. In today's rapidly evolving business landscape, the need for diverse and inclusive entrepreneurship has gained significant recognition. The key to fostering an environment where entrepreneurs from diverse backgrounds can flourish lies in the development of robust business ecosystems. The World Business Angel Investors Week 2024 aims to explore the significance of diversity and inclusion in entrepreneurship. It will also delve into such strategies for entrepreneurs to collaborate with a variety of stakeholders, working towards the creation of more supportive and equitable business environments. The World Business Angel Investors Week, globally coordinated by the World Business Angel Investment Forum, an affiliated partner of the G20 Global Partnership for Financial Inclusion, serves as a platform for stakeholders to pause and reflect on their rapid journey. It seeks to analyze the reasons and methods for leveraging smart finance as an essential financial tool for economic growth. Additionally, the week emphasizes how entrepreneurial ecosystems can generate more jobs, wealth, and social justice through collaboration with key players in early-stage equity markets. This week-long initiative provides an open forum for connecting, learning, sharing, showcasing innovations, and exchanging knowledge to advance entrepreneurship, innovation, and angel investment ecosystems. The WBAW asserts that building stronger business ecosystems with a focus on diversity and inclusion is a shared responsibility. Entrepreneurs, investors, governments, and corporations all play pivotal roles in creating an environment where everyone has an opportunity to succeed. Through fostering collaboration and implementing inclusive strategies, we can cultivate a thriving entrepreneurial landscape that mirrors the diverse tapestry of our global community. With this in mind, the stakeholders of the World Business Angel Investors Week have agreed on the theme for this year's week: fostering diversity and inclusion in entrepreneurship, building stronger business ecosystems. Throughout this special week, all stakeholders and participants will take a moment to reflect on their rapid progress, assessing the necessity of business transformation and its role in fostering entrepreneurship and innovation crucial for thriving in the 21st century economy. Additionally, there will be discussions on how entrepreneurial ecosystems can drive job creation, wealth generation, and social equity, particularly in collaboration with key players in early-stage equity markets amidst the post-pandemic economic landscape. I would like to thank in advance all the stakeholders and partners who will be contributing to World Business Angel Investors Week 2024. They will be highlighting the importance of stronger business ecosystems to foster diversity and inclusion in entrepreneurship, the theme of this year's event. I would like to thank the organizing committee and colleagues who will be taking roles as country chairs and co-chairs, global partners, keynote speakers, and panel speakers. Their combined efforts will create value for the world's startup economies, not only during this week, but in the future as well. They will focus on harnessing the collective knowledge of the world's most influential women leaders, policymakers, entrepreneurs, and artists with a view to addressing critical issues of early-stage equity markets in the new normal. The Week 2024 will also be a great platform from which to campaign for solutions to critical issues and other worldwide concerns at the United Nations, the European Union, and in G20 countries. The ultimate goal of all of the week's keynotes, discussions, presentations, and workshops is to agree on a common roadmap for entrepreneurs, startups, and SMEs that will enable them to emerge from this pandemic period even stronger than they were before. I'm pleased to announce the advancement of the week at the World Congress of Angel Investors, WBAW 2024, the premier gathering of equity and capital markets worldwide. Scheduled for November 19th and 20th, the World Congress will take place at the Four Seasons Hotel, Bahrain Bay. We extend a warm invitation to all global stakeholders to join us in Bahrain for the World Congress of Angel Investors. It is important to note that WBAW 2024 Bahrain will be held under the patronage of His Royal Highness, the Crown Prince and Prime Minister of Bahrain, Prince Salman bin Hamad Al Khalifa. We express our sincere gratitude to His Royal Highness for his unwavering commitment to fostering global economic empowerment through entrepreneurship, innovation, and angel investments. In conclusion, I am confident that each participant in World Business Angel Investors Week until next Sunday will benefit from the collaborative ideas, know-how exchange, training programs and workshops, and global networking opportunities that are offered. I believe that by working together across borders with a common vision and smart dynamics in mind, we are well placed to bring about positive change in the global economy. Thank you.
Thank you so much, Basso, for your opening speech. And thank you so much for the clarification of the theme of this year. Now I will leave the stage to Enrico Caporin, 3 Dots Managing Partner, that present the Unleashing Market Potential, how 3 Dots Capital Advisory transform mid-market enterprise into global competitor. Enrico, the floor is yours.
Buongiorno a tutti, sono Enrico Caporin, ringrazio Enrico Fiore, mio omonimo, per darmi la possibilità di parlarvi un po' di 3 Dots, questa nuova avventura. Non mi è molto semplice perché comunque la società è giovanissima, non fa ancora un anno ad oggi, ed è stata un po' così nell'ultimo periodo travolta in modo positivo dagli eventi. Vi racconto un attimo come nasce questa cosa qui. Non sono io il fondatore diretto, ma sono 2 miei amici che per una questione di network si sono trovati a un certo punto a relazionarsi con il Nasdaq direttamente, con i personaggi principali del Nasdaq in America, da dove una sera a cena sono nate le problematiche che il Nasdaq, il mercato americano in genere, ma soprattutto il Nasdaq, ha avuto nel corso degli ultimi anni, diciamo dal Covid in avanti, e sono stati degli eventi non tanto positivi in quanto si sono trovati a quotare delle SPAC, hanno lavorato molto con delle SPAC cinesi e non solo, e questo tipo di operazioni, facendo spesso e volentieri pump and dumping, non sono state proficue per il mercato stesso, non sono state delle operazioni brillanti, e così, parlando a cena, il Nasdaq si è dimostrato interessato a girare pagina, a dire non vogliamo più fare questo tipo di operazioni. Ci piacerebbe comunque avvicinare anche aziende o mercati che per noi sono comunque distanti, dove non abbiamo mai avuto un grandissimo appeal. L'interesse sì, ma l'appeal non c'è mai stato, tipo i mercati europei, ma non solo, anche i mercati dell'America Latina, perché no, e così via. E un po' per scherzo, un po' per gioco, un po' per sfida, questa cosa qui mi è stata proposta, non solo a me, anche poi a qualche altro mio collega, ed è uscita una proposta direttamente anche dal Nasdaq di dire: ma perché qualcuno non fa una società di advisor per accompagnare o avvicinare aziende che sono normalmente difficili da avvicinare, distanti per motivi culturali, per motivi logistici ed altro, a quello che è per eccellenza il secondo mercato più liquido al mondo. Questo è un dato inconfutabile ed è un dato importante, quando poi magari farò un riferimento anche all'Euronext o ad altri mercati che sono ben distanti da queste logiche. Quindi ci siamo messi a tavolino a vedere questa cosa qui. I miei carissimi amici fondatori avevano un po' più di esperienza perché hanno accompagnato in questi anni delle aziende al Nasdaq, e quindi un'idea per quello che riguarda il suolo americano e l'appeal di questa progettualità qui ce l'avevano. Diversamente neanche loro potevano conoscere il mercato italiano, il mercato europeo in generale. Abbiamo però deciso di adottare l'idea del ma perché no, proviamoci, e nessuno di noi con un'esperienza diretta in materia, e abbiamo iniziato un anno fa, un po' meno di un anno fa, questa avventura qua. E la cosa interessante è che noi l'abbiamo fatto per un'esigenza che comunque era palpabile e tutti quanti ce l'avevamo, cioè il fatto che comunque molte aziende sempre di più internazionalizzate hanno comunque un interesse inespresso, il più delle volte, non sempre comunque, anche di andare verso nuovi mercati. Il mercato principale di sbocco per aziende che sono nel settore tecnologia, nel settore italiano del food, nel settore legato al lusso, ad altre cose molto italiano, va comunque verso quel paese lì, cioè è innegabile l'interesse che di fondo c'è. E comunque abbiamo iniziato a lavorare in questa logica qua. Faccio un breve excursus velocemente. Ad oggi ci troviamo con una realtà tridozza, non posso parlare molto di inclusione, di organizzazione, perché è un'azienda che è ad oggi come è nata, cioè molto molto artigianale. Ci siamo ritrovati comunque in tutto questo periodo qua con una logica di aziende. Abbiamo 8 aziende che stiamo portando in quotazione, abbiamo più di 10 engagement letter firmate e una pipeline di aziende che si avvicina intorno alle 30. Tutto questo è successo perché una volta che abbiamo deciso di fare questa operatività, insieme al Nasdaq abbiamo deciso anche con quale modalità farla, perché non volevamo replicare le grandi strutture. Tredoz non nasce con la logica di portare gli unicorni già esistenti in quotazione, perché ci sono già le Goldman Sachs di turno, ci sono già le Big Four che fanno questo. Noi ci rivolgiamo ad un target che è molto più piccolo, un target di aziende che non sono piccole ma non hanno le conoscenze, la cultura e la possibilità tante volte di relazionarsi, di parlare, di discutere, di confrontarsi anche con queste possibilità. E quindi l'operatività che abbiamo impostato è un'operatività, però abbiamo deciso di fare una cosa che doveva essere comunque esclusiva con i riferimenti che avevamo noi, un'operatività fast track diretta. Quindi abbiamo preso, ripeto, insieme al Nasdaq, abbiamo individuato i legal, studi di legal che hanno esperienza di centinaia di aziende portate al Nasdaq, gli accountant, abbiamo preso una parte marketing importante, ci siamo relazionati con le underwriter che sono fondamentali per andare in IPO, perché diversamente dall'Euronext in America è richiesto che una o più underwriter intervengano prima dell'IPO per creare il flottante di liquidità importantissimo nel mercato americano, e quindi tutto questo abbiamo preso dei legal italiani per relazionarci con. Quindi abbiamo instradato questa operatività, l'abbiamo testata, la stiamo utilizzando e abbiamo quindi creato una cosa, se vogliamo, un po' esclusiva, nel senso che comunque lavorando ci siamo accorti, confrontandoci con fiori commercialisti da tutto il nord Italia ma non solo, che una realtà così non esisteva, forse nessuno l'aveva mai fatta e non abbiamo ancora capito perché, però in realtà le cose le abbiamo trovate in questo modo qua. Ora abbiamo fatto e stiamo facendo continuamente un'esperienza direttamente sul campo, per quello stiamo costruendo Tridots un po' alla volta, day by day, perché in realtà non avevamo letteratura su questa materia qua. Abbiamo fatto una cosa nuova, è stata una scommessa, e la cosa che ci ha sorpreso enormemente, che continua a sorprenderci ogni giorno, è il grandissimo interesse nel conoscere perlomeno quelle che sono le realtà. L'imprenditore italiano, nel frattempo c'è stata tutta un'operatività molto diretta di investitura ufficiale al Nasdaq direttamente a New York, abbiamo creato un evento a Milano il 30 di novembre, abbiamo fatto da poco un evento, uno Space Meeting a Venezia, dove Confindustria stessa ci ha richiesto la presenza del Nasdaq, e stiamo avendo richieste di collaborazione con società che vedono coinvolti imprenditori tipo Confindustria di diverso taglio, più grandi, più piccole, perché comunque l'interesse è enorme e forte. Ora, spesso e volentieri molti chiedono: ma perché un'azienda deve andare pubblica, deve andare a mercato, eccetera, eccetera, eccetera. Quali sono le caratteristiche per andare al Nasdaq, diversa dall'Euronext? Qui entreremo in una specifica tecnica un po' più approfondita, vi do solo delle linee guida. L'Euronext abbiamo avuto parecchie richieste di aziende che non hanno nell'Euronext la liquidità sufficiente per poter avere degli scambi giornalieri continui e costanti, e chiedono la possibilità di avere magari un dual listing, di essere listate magari nel mercato americano, perché c'è la possibilità ovviamente di avere questo e quello, ma soprattutto le grandi differenze sono queste. In un mercato sempre più internazionalizzato è chiaro che le aziende possono essere tranquillamente, se decidono di andare a mercato, e decidere di andare al mercato è una scelta, non è un obbligo, è una scelta di strategia e di business plan, soprattutto relativa a dove vuole andare un'azienda, quali mercati vuole conquistare, dove vuole presenziare e qual è la logica di crescita nei prossimi 5-10 anni. Questo è fondamentale. Non è un obbligo andare al mercato, un'azienda può rimanere tranquillamente con le sue dimensioni, magari già importanti, nel mercato locale e non avere nessun obbligo di andare a mercato. L'imprenditore che abbiamo visto spesso dal nord Italia, non solo perché abbiamo anche delle aziende che non sono italiane, è un imprenditore che normalmente non conosce le dinamiche di mercato e pensa che magari andare a mercato significa perdere la governance, perdere la logica di gestione dell'azienda. Tutto questo non esiste, cioè un'azienda quando va a mercato poi soprattutto va con un 20%, quella volta 15%, 20%, 30% al massimo, quindi anche tutta la parte di governance e di gestione dell'azienda continuerà ad essere in capo all'imprenditore. In America anche con il preference vote, anche se dovesse avere una piccolissima percentuale di azioni, questo è possibile. Quindi è la curiosità comunque di tutti quanti di capire queste dinamiche qua, e noi quello che stiamo cercando di fare è anche fare una certa quantità di contatti e di riunioni, di eventi per comunicare queste cose qua e per far conoscere questa possibilità. È una possibilità in più che ci vede, ripeto, un po' coinvolti e che stiamo perseguendo. La logica è anche quella di offrire queste possibilità, perché comunque nei vari settori che vedono coinvolti il mercato italiano è sempre più evidente. Spero di essere stato sicuramente non troppo esaustivo, perché il tempo è limitato, ma avevi dato un quadro un po' generico di tutto questo.
Thank you so much, Enrico. And now is a turn to Giovanni Campodall'Orto, key account of Run Capital Partners, with his speech about H securitization from illiquid to liquid financial instrument. Please, Giovanni, the stage is yours.
Welcome everyone, and thank you for having me today. We are excited to introduce you to Euro. Euro is a small platform designed to streamline and simplify the process of securitizing alternative assets for EU and Swiss professional investors. Let's dive into how Euro can revolutionize your investment process. At Euro, we specialize in making the securitization of complex, illiquid assets both quick and economical. Whether you are a wealth manager, a family officer, or an investment arranger, our end-to-end solution are tailored to meet your specific needs. We offer both hosted and dedicated securitization solution, significantly reducing the time to market and the associated costs. Our platform leverages advanced technology to provide a seamless user experience, integrating with the existing financial systems and offering real-time analytics. This ensures that you have all the information you need to make informed decisions and make your investments effectively. For wealth managers, fiduciaries, and private banks, Euro takes on the administrative burden, allowing you to securitize alternative assets effortlessly. Our solutions enable you to pool investors to meet minimum ticket size for unique investment opportunities and improve portfolio collateral potential. This streamlined approach enhances transferability and reduces operational complexities. We also provide comprehensive support services, including compliance management, due diligence, and investor relations. Our team of experts works closely with you to ensure that all regulatory requirements are met and that your investors receive timely and accurate information. Family office, for example, benefit immensely from Euro's capabilities. We handle the heavy lifting, enabling you to focus on sourcing the best investment opportunities. Our services improve collateral potential for illiquid family wealth and offer efficient succession planning instruments. Whether it's co-investment structures or better leveraging non-bankable assets for collateral, Euro has you covered. In addition, we offer bespoke tailored solutions to the unique needs of each family office. This includes personalized investment strategies, tax optimization, and asset protection mechanisms. Our goal is to help you preserve and grow your family wealth for future generations. For investment arrangers, Euro provides a seamless path to market for your unique projects. Our platform enables professional investors to efficiently acquire and custody exposure to venture capital, real estate, infrastructure, and many more. We transform these opportunities into bankable products that are easy to manage and distribute. Our innovative approach includes the use of blockchain technology to ensure transparency and security throughout the investment lifecycle. This not only builds trust with your investors, but also enhances the overall efficiency of your operations. Euro simplifies the investment process by transforming non-listed illiquid assets into securities that are far less complex to handle. This not only saves time and resources, but also makes it easier to meet minimum investment tickets, sizes, and improves the collateral potential of your assets. Our experienced operations team manages the complexities, allowing you to focus on what matters most. We also provide ongoing support and maintenance, ensuring that your securitization vehicles remain compliant and perform optimally. Our proactive approach to risk management helps you navigate market fluctuation and protect your investments. Euro offers hosted debt securities, dedicated securitization vehicle setups, and fractional CO services. Our hosted solutions allow your investors to easily invest in EU-listed debt securities, while our dedicated services provide a quick, cost-effective setup of your own securitization vehicle. Additionally, our fractional CO services ensure efficient management and of your dedicated vehicle, coordinating all service providers involved. We also offer innovative financial products such as green bonds and social impact bonds, which align with our commitment to sustainability and social responsibility. These products provide attractive investment opportunities while contributing to positive environmental and social outcomes. Our clients have seen remarkable results with Euro. Wealth managers, for example, have successfully pulled investors for high-ticket opportunities. Family offices have optimized collateral potential, and investment arrangers have brought unique projects to market efficiently. The ease of securitization with Euro has been a game changer for many. At Euro, we understand the critical importance of environmental, social, and governance factors in driving sustainable and responsible investments. We are dedicated to fostering entrepreneurship that aligns with these values, ensuring that our platform not only supports economic growth, but also contributes positively to society and the environment. We actively encourage support ESG-focused projects, helping entrepreneurs to securitize assets that align with sustainable practices. Our platform is designed to provide the necessary tools and resources for these projects to thrive, from green energy initiatives to social impact ventures and governance-focused innovations. By prioritizing ESG projects, we aim to create a positive impact on the world while delivering strong financial returns. This commitment includes providing tailored solutions for ESG investments, facilitating access to a network of like-minded investors, and offering expert guidance on meeting ESG standards and reporting requirements. Join us in advancing the future of entrepreneurship with a focus on sustainability and responsibility. Together, we can build a more inclusive, ethical, and prosperous world through the power of ESG projects. Starting with Euro is really simple. You can visit our website and complete a brief questionnaire to tailor the best solutions for your needs. Within 24 hours, you'll receive a proposal detailing our service and firm quote. Once you accept, a 25% down payment secures your spot, and we handle the rest. From legal to operational management, we ensure a fast and smooth journey to market for your securitization projects. We also offer a comprehensive onboarding process, including personalized training sessions and dedicated support to ensure that you and your team are fully equipped to use our platform effectively. Our goal is to make your experience with Euro as seamless and beneficial as possible. In the end, I'm really happy about sharing the story of Euro. Thank you for watching, and we look forward to helping you unlock the full potential of your investments with Euro. For more information, visit our website or contact us directly to share more about use cases of Euro and securitization. Thank you so much.
Thank you so much, Giovanni, for your very interesting speech. And now I leave the stage to Matteo Bodini, Legal and Compliance, that will talk about the opportunity of the company in the UK and the special infrastructure of the company to protect the investment. Please, Matteo, the stage is yours.
Hello everyone, welcome to the World Business Angel Investors Week. First of all, let me introduce myself. My name is Matteo Bodini. I'm a corporate lawyer based in London who specializes in company formation and setting up of international business group for entrepreneurs willing to invest in the UK or to work from the UK worldwide. And I've been asked to make this short presentation regarding the business in the UK as in my role of head of legal and compliance at Run Capital Partners. Since the UK is still one of the most attractive places in the world, for business setting up and international business in general, we thought that it would have been useful for you to get some hints regarding the main company structures you can set up in the UK, so to have a better understanding of the ease of this UK system for setting up a business and in creating some extra value by investing in a country as a foreigner. Particularly, we want to give you an overview of the most common forms of UK corporate that you can create here, and just to give you a better understanding of how these structures work and how easy it is to set them up. To this end, we have created a few slides giving you some hints regarding the various structures and also making some comparison for you to understand which structure may be more useful to you in case you want to set up or explore making business in the UK. Okay, here we start. Let's start by setting the aims of this presentation, which is choosing the right business structure in the UK. I mostly focus on the different trading structures available for you in the UK to start with. We will go through the advantages and disadvantages of each structure, and we will explore the suitability for international entrepreneurs in setting up the business. By understanding this operation, you will be better equipped to make informed decisions on when establishing and operating a business in the UK. Just to give you a brief overview, we have chosen the four main different kind of entities you can set up in the UK, starting from the limited company, which is clearly the most used and most common form of corporation you can set up in the UK. We will also take a look, even if it's the last one, to the public limited companies, which are a bit more complex and generally are not the one you will choose if you want to start business in the UK, at least at the beginning. And we also go through the general partnership and the limited liability partnership, which are forms of corporation which might be useful in some cases, but they also have a lot of cons we will see straight after. So let's start from the limited companies. A limited company is the queen of all the company structures you can set up in the UK. It's absolutely the most used by entrepreneurs, even if they're local or foreigners. It has a lot of advantages which can give you, including, first of all, the limited liability, which means that it's a separate entity from the shareholders, and the liability of the company is strictly related and limited to the amount of equity you invested into it. It is a very credible structure. It increases the confidence and the trust you can have with contractors and clients or investors. It has zero or little bureaucracy, as a limited company may be incorporated literally in hours, and is a very tax efficient structure, mostly even if compared to other forms of business like a partnership or working as a sole trader. Clearly there are some cons, which is more costly than working as a sole trader of other part of companies, because you have a few undertakings a year, public undertakings. You will need to publish once a year your annual accounts and disclose some sensitive data about the company, the shareholder, the directors, which is due to the UK choosing to be very transparent and accountable in the international market. For international entrepreneurs, the limited company gives you a very balanced approach to managing risk and enhancing credibility in the UK and worldwide. And it also gives you compliance with the UK corporate regulation, is necessary and is something that you want to achieve to set up a proper business in the UK. Let's move to the general partnership, which, unlike the limited company, has a different kind of liability. You have all the members have a share responsibilities, and which reduce from the individual burden, but it also gives you the cons of have a joint and several liability among all the partners, which means that each partner is individually responsible for business debts. General partnership has the advantages of pooling resources, skills, and expertise, and can enhance business growth. And the other advantage or disadvantage, according to review, is the taxation and the profit tax as a personal income of all the partners, which means that a general partnership doesn't have its own annual return, except that all the losses or the revenues or the profit are passed directly onto the members. The general partnership was to be extremely common in the past, is still used from time to time, and probably if the members are the limited liabilities company, is one of the best structure to set up investments in the UK, especially if you are looking to invest in assets of things which will require regulation or authorization from a regulatory body. Since we examine the general partnership, let's now move to something which has been innovative in the market and is being authorized to be set up in the UK since 2001 only, the limited liability partnership. This sort of structure encompasses some new regulations comparing to the limited to the general partnership. First of all, the very big advantages it gives you if you want to set up a partnership, which advantages we already discussed before. The limited liability in a limited liability, the partner's liability is limited to their investment, protecting personal assets. It's a very flexible structure. It combines the operational flexibility of a partnership with the limited liability benefits of a company, and in terms of taxation it works exactly like a general partnership, which means that the profits or the losses are passed on directly to the members, and the limited partnership doesn't even have its own annual accounts. It is a complex structure. It requires a bit more of a struggle to be set up, also in terms of undertakings you have to do through the register of the company's house. The administration still requires to set up annual return, and for international structure is very suitable for professional services firms where the partners seek to have a limited liability, and it's essential to understand that the local legal framework and compliance requirement to work properly with it. Otherwise, it might be slightly risky, even if it's a limited liability partnership. And finally, let's move now to the public limited company, which is the most expensive type of company you can set up in the UK. Clearly, before setting up a public limited company, you will need to go through a limited company most of the times. Even if I assume that your aim is to arrive to get to a public limited company, because this is the kind of company which is used when you go on an IPO, which most of the times is the dream of every entrepreneur, also in terms of monetization of all the strugglings that they have gone through their business. As a limited company, clearly has its own capital. It can raise substantial capital by settling shares to the public. Mostly is used in the UK is most usually by banks and other huge international corporation. Is extremely credible and visible in the market. It attracts more business opportunity and investment. The liability of the shareholders clearly still limited to the investment, protecting personal assets, but clearly by a regulation point of view, this is the top quality and top regulated company you might go through, which means that it's subject to stringent regulatory and reporting requirement. It's extremely costly to run a public limited company. High costs are associated with establishing and maintaining the company, listing fees, regulatory and compliance. There is a perfect and total disclosure regarding the financial statements, the operational disclosure, the requirements, and clearly is not the form of company you may desire if you're just starting up your business in the UK, but still probably is your aim, as we said earlier. Is ideal for large-scale operation looking to expand significantly in the UK, and still among all the companies which have been set up in the UK is not very common in terms of number. Finally, we want to give you an overview of the amazing number of companies which are incorporated in the UK. Clearly, there's a big discrepancy between the companies incorporated in Northern Ireland or Scotland compared to the number of companies in England and Wales, and which gives you a very insight regarding what sort of fashion this country still gives for setting up a business. And particularly, I want to share some thoughts regarding some other statistics which are very interesting. Since January 2024, in England have been incorporated almost 250,000 companies, which is a very, very, very high number per day, and also gives you an idea of what sort of amazing country this is still for business solutions and entrepreneurs willing to invest in the country or worldwide. And we also wanted to finalize our presentation by giving you a brief summary of the current situation of businesses in the UK, so you may have a better understanding of what sort of entrepreneurs, from where countries they come from, and who's willing to invest in this country, and why mainly so many people, entrepreneurs worldwide, still choose the UK as place for setting up their business. And finally, we came to get to the conclusion of this presentation. I hope you enjoyed. We really just wanted to give you some hints and overview over the UK business system without getting in particulars, which will have been bored and not appropriate at these times. If you have any curiosity or you're thinking up as the UK to set up your business or start trading international, do not hesitate to get in touch with us. We will be happy to assist and to give you all the explanation you may need to set up properly a business in the UK and start trading from here.
Thank you so much, Matteo, for your presentation. And now I will leave the stage to the first roundtable with the moderator is Marco Falsarella, analysis of Rand Capital. And with Marco, we will have Mattia Donà and Davide De Luca. They will talk about the investment certificate, a tool for navigating market uncertainty. Please, Marco, the stage is yours.
Good morning, everyone. Today, we have an exciting topic to discuss, the investment certificates. To help us understand this complex financial instrument, we have with us two experts in structured products, Mr. Marco Falsarella and Mr. Davide De Luca. Welcome.
Good morning. Thank you for having me.
Good morning, everyone.
Great. Let's start with the basics. Marco, would you like to introduce us what exactly an investment certificate is?
Yes, it's a pleasure. An investment certificate is a type of structured financial product. This instrument offers investors the potential for high returns linked to the performance of an underlying asset, such as a stock, index, or commodity. It usually has a protection level called the barrier level. It pays a recurring coupon, and within a certain types of investment certificates, it can have also embedded a feature that allows it to be automatically redeemed or called back in advance before maturity, if certain conditions are met.
Great. And could you explain how this last feature works?
Sure. When we are talking about investment certificates falling within the group of conditionally protected capital certificates, this feature is triggered when, on a specific observation date, the underlying asset reaches or exceeds a predefined level known as fixing level or strike, which corresponds to the level of the underlying asset when the investment certificate was issued. If this happens, the certificate is automatically redeemed and the investor receives a predefined payout, including the initial investment and a fixed coupon. But if the underlying asset does not reach the strike level, the certificate remains active until the next observation date or maturity.
Okay, and what happens on the other hand if the barrier level is reached by maturity?
If the asset's value is above a certain threshold, in this case, the so-called barrier level, the investor typically receives their initial investment back, together with the stream of coupons. In the other case, if the asset's value falls below this threshold, the investor might incur in a loss, receiving less than their initial investment.
I see, and it sounds like this kind of certificates can be quite risky. So what are other main risks involved?
Yes, there are several risks. The primary risk include market risk, where the underlying assets value can fluctuate, with the possibility of losing a big chunk of the initial investment if the asset performs poorly, or all of it in the case of the underlying asset default. There's also a credit risk to take into consideration, which is the risk that the issuer of the certificate might default.
And given this risk, what type of investor would typically be interested in these certificates?
Well, certificates are generally suited for investors who are seeking high returns and are willing to accept higher risk. They might appeal to those with a strong view on the performance of the underlying asset and a good understanding of market conditions. They are not typically recommended for conservative investors or those with a low risk tolerance. However, there is a particular type of certificate called equity protection that allows the investor to receive back its initial investment, even if the underlying asset's value shrinks towards zero.
Okay, and how do these certificates compare to other structured products?
Certificates are similar to other structured products in that they offer customized exposure to an underlying asset with specific payout structure. However, the feature sets them apart by providing a mechanism for early redemption, which can be beneficial if the underlying asset performs well. Compared to traditional investments like stocks or bonds, they offer a unique risk-reward profile, even if sometimes they can be more complex to understand.
And what would you say are some common underlying assets for these certificates?
Well, as I said, Marco, before, the underlying asset for certificate can vary widely. Common example include major stock indices like the Standard Poor's 500, individual stocks of large or small companies, commodities like gold or oil, and even foreign exchange rate. The choice of the underlying asset will affect the risk, the volatility, and of course the potential performance of the certificate.
Okay, and can you give us a real-world example of how a certificate might work?
Sure. Imagine a generic investor with an average risk propensity. Her name is Hannah. She is intrigued in an autocallable certificate to do its structure and potential. With the support of her financial advisor, she decided to invest 10,000 euros in a certificate linked to NVIDIA Corporation. And a certificate has 5 years term with the following characteristic: coupon rate at 8% per annum, autocall trigger level at 100% of NVIDIA price level at issue date. It's also known as strike or fixing level. The observation date is annually, and the barrier level is set at 60% of the stock fixing level. On the day of the investment, the quotation of NVIDIA is around 80 US dollar. The first two, if we imagine that the first 2 years have flown by and Anna has collected 1,600 euros of coupon. But at the end of the third year, the NVIDIA quotation is 100 US dollar, which is 155% above its initial level. As per the terms of the certificate, this triggers the early redemption of the structured product. Anna received a call from her advisor that informed her the certificate has been called, and she will receive her initial investment plus the third coupon. Anna does a quick calculation. In 3 years, she has earned a total amount of 2,400 euro. But what would have happened in the opposite scenario if NVIDIA had not performed well? If we imagine that at the end of the fifth year, the quotation has unexpectedly dropped 55% from the initial level. In this case, Anna will not receive back their fifth annual coupon, and the total initial capital she had invested. She would rather receive back 4,500 instead of the 10,000. While at the same time, she would have also been collected the first 4 years of the bond is around 3,200. After the experience, Anna, like an average investor, is wiser of the potential for high returns with early calls. That was exciting, but the protection barrier provided some comfort. However, she also realized the importance of market condition and the inherent risk.
That's great. Thank you. The example really clarifies things. So how should an investor go about measuring whether a certificate is right for them?
Investors should start by evaluating their risk tolerance, investment objectives, and time horizon. They should understand the specific of their certificate, including the underlying asset, the barrier, and the observation date, also the potential payouts. It's also crucial to consider the user creditworthiness and the overall market condition. Consulting with a financial advisor could be helpful in making an informed decision.
Great. And what role do issuers play in the market for certificates, and how do they benefit from offering these products?
Issuer, typical banks or financial institutions, create and sell certificates as part of their structured product offerings. They benefit by earning fees from the sale and potentially hedging their own risk exposure. Issuers often have sophisticated risk management systems to handle the complexities of these products. For them, it's a way to attract investors looking for specific risk-reward profiles that traditional investment might not offer.
And are there any recent trends or developments in the market for certificates?
Yes, recently there has been an increase in customization and innovations within the market. Issuers are creating more tailored products to meet specified investors' needs, such as certificate linked to ESG indices that stand for environmental, social, and governance, or incorporating features that allow to different type of payout and particular conditions for capital protection. Additionally, technological advancements have made it easier for investors to access and understand these products through online platforms and tools.
That's very interesting. And how important is it for investors to stay informed about the underlying assets throughout the life of the certificates?
Well, it's very important. The performance of the underlying asset directly impacts the potential payouts and risks associated with the certificate. Investors should monitor the asset's performance and stay informed about any factors that could influence it, such as market trends, economic data, and geopolitical events. This helps in making timely decisions and understanding potential outcomes.
As we sum up, what final advice would you give to someone considering investing in certificates?
My advice would be first to truly understand the product, assess your risk tolerance, and consider how it fits into your overall investment strategy. And don't be afraid to ask questions and seek professional advice. Remember also that while these certificates can offer attractive returns, they come with significant risks that need to be carefully evaluated.
And understanding, for me, understanding also the terms and conditions of the certificate, especially the triggers level and the potential risk involved, is if something I would suggest to take deeply into consideration. Also, make sure you are comfortable with the possibility of losing your investment if the underlying asset performs poorly. I do agree with Marco. It's crucial to align the investment with your risk tolerance and overall financial goals. And consulting with a financial advisor can provide a valuable insight to your specific situation.
Thank you so much, Marco and Davide, for sharing your expertise with us today. It's been a very enlightening discussion.
Thank you for having me. It was a pleasure to be here.
Thank you for your time, for the time shared.
And thank you to our listeners. We hope this interview has provided you with a clear understanding of how certificates works. And stay in the loop for more insightful discussions on financial topics, and have a great day.
Thank you so much to all of you about this very interesting roundtable, and for your very clear information about the investment certificate. I will leave the stage to the last roundtable that the title is Borderless Smart Fundraising for Venture Capital, where the moderator is Elena Bernardi, marketing specialist, and the two panel speakers are Milo Guastamacchia, Bound co-founder and CEO, and Luca Padovan, CEO of Run Capital and Partners. Please, Elena, the stage is yours.
Welcome to our interview today. We're excited to delve into the innovative solutions that are transforming cross-border fundraising for US-based VC funds and private companies seeking to raise capital from EU investors. We have two distinguished guests with us. First, let's welcome Milo Guastamacchia, the founder and CEO of Bound, and Luca Padovan, the CEO of an Italian family office. Welcome, Milo and Luca.
Thank you very much. It's a pleasure to be here.
Thank you. Thank you for having us.
Milo, could you start by explaining what inspired the creation of Bound and what problems it set out to solve?
Absolutely. Bound, who is a project that is going live later on this year, it will be officially launched in autumn of this year, is being developed to address the significant challenges faced by non-EU venture capital funds and also startup founders when trying to raise capital from EU professional investors specifically. These challenges include navigating the complex EU financial regulatory framework, very high legal costs, and typically lengthy timelines. We aim to create a solution that simplifies this process, making it faster, more affordable, and accessible for capital raisers to access the EU investors market, therefore eliminating the traditional barriers to cross-border fundraising.
Would you kindly elaborate on why US fund managers, for instance, cannot easily promote their US master fund or Cayman feeder fund in the EU?
Sure. The current pan-European regulatory framework for the management and distribution of alternative funds, which is known as the AFMD, the Alternative Investment Managers Directives, imposes some constraints for the marketing of non-EU funds by non-EU managers to investors in the EU. And in fact, marketing by non-EU funds is possible under the local private placement exemptions, okay? But in practice, that means that a US fund manager will need to go through a lengthy application process, typically with the financial regulator of each single EU member state where his prospect investors are based, and therefore cannot benefit from the marketing passport for the distribution of their product across the whole EU, which instead is available and taken advantage of by EU alternative investment funds. And as you can imagine, such process comes with high legal fees and delayed timeframes. And of course, to bypass such marketing restrictions, many US funds currently opt for setting up a feeder fund, right? They actually go to the length of setting up a EU feeder fund to target EU investors, because that is a structure that complies with the prescription of the Alternative Investment Fund Managers Directive, the AFMD, and can therefore be freely marketed within the EU to professional investors. However, setting up such regulated feeder structure is very costly, and it takes months to be up and running. Plus, its total expense ratio is typically quite high due to the plethora of regulated service providers required to manage such a fund and the related compliance costs. At Bond, we have been active in the fund management industry for years, and we're fully aware of such pain points. And therefore, we decided to come up with a solution that would make non-EU investment funds' life much easier.
Thank you, Milo. Luca, now let's consider the investor side of things. As the representative of a family office based in Italy, what are the specific challenges you see for wealth managers and family officers to invest in alternative assets such as venture capital, and how does this platform address them?
Of course, family offices investing across Europe and outside of Europe typically encountered numerous challenges when looking to allocate capital into alternative assets like venture capital and private debt. A major hurdle is the high minimum investment requirements many of these alternative investment opportunities demand. This locks out a smaller investor from participating. Another hurdle is that the direct investment process itself is increasingly time-consuming and costly. Each investment often requires drafting complex legal agreements, and heavy lawyers review every document, which quickly racks up legal fees. When you lawyer on cross-border transactions, the legal and tax complexity escalates even further. In addition, if we wish for a pledge to be legally put in place over the assets on the company we are investing into, so that our investment collateralize, complexity and costs pile up. Another key issue is that many of the alternative assets we want exposure to, whether a venture fund, a safe agreement with a startup, or say a loan, are non-custodiable assets that can't be easily held and transferred like public securities. Our other option is to invest through conventional feeder funds, but they tend to be exorbitantly expensive with high fees that eat into returns. Non-EU feeder funds also come with potential tax inefficiencies for investors like us based in Europe.
Thank you, Luca. Now, Milo, could you elaborate on how the platform's innovative solution works, how it solves the challenges Luca just described, and what makes it unique to the market?
Yeah, our core proposition lies first and foremost in offering to capital raisers, right? So really, this is the target of our solution, to offer them the opportunity to wrap their alternative funds, unlisted equity or other forms of private financing, taking them and basically making them suitable and wrapped into a EU-compliant note or bond or debt security that can be custodied by investors in the EU, both within a securities account with a bank or also on the blockchain as a blockchain token in a digital wallet that they're the owners of. And this makes it straightforward for you professional investors, and we hope that in the future also retail investors, in fact, to invest in such asset class, with Bond's team taking care of the admin and all the legal complexities of the final investment into the alternative assets in question, which is indeed the fund or the funding of a private company. And this type of structure not only simplifies the regulatory compliance process for marketing in the EU, but also significantly reduces cost and the time to market in the first instance compared to, for instance, EU feeder funds. And the experience for capital raisers is optimized thanks to our app. It's a web app called Open Foundry, which allows them to design themselves their bond wrapper, right? So they are themselves be able to go through the whole process from A to Z and work actively into creating themselves online their product. So everything is very transparent for them. They can follow all the status in the process and just be aware of any development during the creation and design process for their bond wrapper. Additionally and importantly, our investor portal handles the registration, the onboarding, the AML due diligence, and the contractual obligations for prospect investors, ensuring a seamless investment experience for them. This unique approach introduced by Bond effectively creates a new business category, which we call borderless smart fundraising.
Thank you, Milo. Would you mind delving a little bit further on what you just highlighted and the benefits of the bond platform for capital raisers wanting to target EU investors?
Certainly, bond offers a transformative approach to cross-border fundraising, changing how capital raisers can attract and secure funding in other financial markets. One of the most significant benefits is the enhanced access to a diverse investor base. By converting alternative assets constituted under different regulatory frameworks into an EU-compliant note, bond, or debt security, we enable investments from a wider range of EU and Swiss investors, including those who might have been previously excluded due to high minimum investment thresholds or complex legal requirements. Thus, fund managers can target, for instance, family offices, fiduciaries, wealth managers, and not to focus only on those institutional investors that have sufficiently sophisticated organizational structures to be able to invest directly in their fund. Both fund managers and investors would also benefit from a simplified, leaner cap table with only one institutional investor, indeed our bond vehicle, instead of a collection of many small investors taking part to the cap table. This simplifies in a meaningful way investors' relations, for instance. Capital raisers also benefit from dramatically reduced costs and timeframes, thanks to the web app I introduced earlier, the Open Foundry app and its digital process for creating wrappers. Our platform slashes legal fees by over 50% when compared to the typical fees they would pay when reaching out to legal counsel directly. And the time to market is also up to 4 times faster. This is based on the industry average. We know the industry and how this works in the EU and specifically in Luxembourg, and this is basically what our solution can improve. This efficiency allows capital raisers to act swiftly and therefore seizing market opportunities without the typical delays caused by regulatory and administrative hurdles. Moreover, the seamless investor experience provided by our platform fosters a stronger investor involvement because our portal handles all aspects of registration, due diligence, and contractual obligations, as I said before, and it ensures a smooth and transparent process for investors who have finally a way for them to go online and view and manage the whole information during the life cycle of the investment itself, and not just limit their approach to investing and the relationship with the issuer to just the initial subscription where they just go in, invest, and then they forget about the investment for the next 10 years, and they just receive seldom updates regarding the status of the underlying investment. This not only builds trust, but also encourages repeat investments, which is crucial for long-term fundraising process and success. And by streamlining these processes, Bond allows capital raisers to focus on their core business activity, which is innovate, grow, and instead of spending time getting bogged down by administrative tasks. This combination of broad investor access, cost, and time efficiency and enhanced investor relations positions Bond, we believe, as a game changer in the world of capital raising across different regulatory markets.
Perfect. Now I will ask Luca, from an investor perspective, can you please highlight how all complexities of investing directly in foreign unlisted assets, the presence of a foreign regulatory framework affects the availability or efficiency of Italian investors to fund the target investment?
Absolutely. Investing in foreign unlisted assets inherently comes with a range of complexities, and one of the most significant challenges is navigating the varying regulatory frameworks across different jurisdictions. Firstly, each country has its own set of regulation governing foreign investment, which can include restriction on capital flows, foreign ownership limits, and compliance requirements. Italian investors must truly understand these regulations to ensure they can legally and effectively participate in the target investment. Failure to comply with local laws can result in legal penalties or even the invalidation of the investment. Secondly, the process of due diligence becomes more intricate when dealing with foreign unlisted assets. Italian investors must not only evaluate the financial and operational aspects on the target asset, but also assess the regulatory environment. This involves understanding the local business practice, tax implications, and any potential changes in regulations that could impact the investment profitability. Moreover, the regulatory framework can influence the ease with which Italian investors can repatriate profits. Some countries impose restriction on the transfer of funds out of the country, which can affect the overall return on investment. It's crucial for investors to factor in this consideration when planning their investment strategy. To mitigate these challenges, Italian investors often rely on local expertise, such as legal and financial advisors, who are well versed in the regulatory landscape of the target country. But of course, such assistance comes with a usually high cost.
Thank you, Luca. Let's go back to Milo, asking how exactly does the bond platform streamline the investment process? Streamline the investment process for EU investors and allow them to overcome the regulatory and legal complexity of investing abroad, as just mentioned by Luca.
Yeah, as mentioned before, the platform streamlines the investment process by offering EU debt securities to those EU investors and Swiss investors. And those securities can be seamlessly marketed across the EU and therefore can be easily subscribed by EU investors via, as said before, either their bank, so they can go to the bank and place an order for such securities, or they can go through our investor portal. We do manage all the necessary due diligence and contractual obligations with investors, ensuring a hassle-free experience. And also we take care of sorting all the operation and legal challenges for the target investment. This frictionless investment process is designed to save time and money, making it more attractive for EU investors to participate in offerings from non-EU funds and private companies. And just compare a few clicks on our digital portal or simply instructing their bank's trading desk to purchase securities, register on essential security depositories. In Europe, we have Clearstream, Euroclear, or in the Italian market, specifically Monte Titoli. Compare this process with the compliance operation and even legal hurdles of going through having to invest directly and therefore taking care of having to review and or put together legal agreements under foreign law potentially.
Luca, how do you see this solution impacting the fundraising strategies of funds and startups aiming to attract investors such as your family office?
Yes, I believe this solution can revolutionize fundraising strategies by simplifying regulatory complexity and reducing the cost and the time involved for setting up the right financial product to target EU and Swiss investors. Capital raisers can get to the market faster and more cost-effective. But the key here really is for capital raisers to think about what is that product that makes investment by EU investors more efficient. Investing in a custodian asset such as the EU bond is a far better option for investors, not only that investing directly in the foreign asset, as we already discussed, but even investing in the EU feeder fund. This is not only because the onboarding process with a dematerialized or tokenized debt security, especially one issued by bond, is far smoother than having to fill in subscription forms with a fund transfer agent, but also as recurring costs are lower, it means that for the same underlying investment, bond solution will yield higher returns to investors than in a feeder funds.
Perfect. Milo, beyond just fundraising, the platforms appear to offer a range of services. Can you tell us more about the comprehensive support it provides?
Yeah, sure. Of course, we do assist with the setup of the EU wrapper, as I was mentioning before, but that's not where we stop. In fact, we do provide extensive support during the life cycle of the issued financial product. This includes obviously domiciliation, corporate governance, administration, accounting, audit, tax compliance, and also risk management. Essentially, we cover all the operational aspects of the wrapper throughout the life cycle of an investment or an underlying investment in the alternative assets, whether this is in the US or anyway foreign to the EU. And therefore, we allow clients to focus on the strategic goals without worrying about the administrative burden.
Let's discuss now the impact of these lifecycle management services. Luca, from your perspective, how does this operational support enhance the attractiveness of the foreign investment to EU investors, especially in Italy?
Yes, the operational support enhances attractiveness by ensuring that all aspects of regulatory compliance and administration are meticulously managed. This builds trust and confidence among EU investors, who can be assured of the transparency and efficiency of the investment process. In Italy, where investors may be particularly cautious, this level of assurance can significantly boost a fundraiser's appeal. Also, being bonds wrappers EU financial product, they are subject to EU investor protection rules. Non-EU funds or private companies may not adhere the same high-level investor protection standards that EU products are required to meet. Also, non-EU funds may not be subjected to the same level of transparency and reporting requirements as EU funds, potentially leading to a diminished confidence for EU investors to directly invest in such product.
Thank you, Luca. Milo, you mentioned before bonds efficient when it comes to cost and time to market for fundraisers to be able to go out there in the EU with a product that appeals to investors. So can you elaborate on?
Yeah, the platform offers a significant advantage over traditional methods of overcoming the EU marketing restrictions. For instance, setting up a feeder fund or other type of feeder solutions can typically cost upwards of 50,000 euros and typically take anywhere from, I would say, 3 to 5 months. Recurring fees to manage such structures in the EU typically vary from 60,000 euros per annum to upwards of 200,000 euros, and depending on the amount of assets under management, of course. In contrast, our solution can be set up in about 2 weeks with a setup fee starting from approximately 25,000 and a flat maintenance fee of approximately 40 to 45,000 euros per year. This not only reduces obviously costs, but more and it reduces them by more than half of when compared to EU fund feeders, for instance. But it also accelerates the fundraising timeline and make it much more efficient.
For Luca, Milo was mentioning that the financial product can be tokenized and therefore acquirable directly without any financial intermediary, with its ownership recorded on the blockchain. How relevant is that feature for you as an investor, and how important you think is for investors in general as an alternative method that having to go to the bank to subscribe?
The ability to tokenize financial products and acquire them directly without intermediaries is a significant advancement in the investment landscape. For me, as an investor, this feature is incredibly relevant for several reasons. Firstly, this intermediation brings a level of efficiency and transparency that traditional methods often lack. by eliminating middlemen, and we reduce the cost associated with the transaction. Banks and other financial institutions typically charge various fees for their services, which can eat into their returns on investment. With tokenization, these costs are significantly minimized, allowing investors to retain more of their profits. Additionally, the use of blockchain technology to record ownership provides a robust, immutable, and transparent ledger. This level of transparency is crucial for building trust in the investment process. As an investor, knowing that my ownership is securely recorded and cannot be tampered with gives me greater confidence in the integrity of my investments. Moreover, the ability to acquire investment directly via digital platform enhances accessibility and convenience. Traditional investment processes can be cumbersome, requiring extensive paperwork and multiple visits to a bank. Tokenization simplifies this process, enabling investors to purchase assets with a few clicks, anytime and anywhere. This easy access is particularly attractive to a new generation of investors who are tech-savvy and prefer digital solutions. For investors in general, this future democratizes investment opportunities. It opens up markets that were previously inaccessible to many due to high barriers to entry and geographically limitations.
Milo, what are some of the future developments and enhancements we can expect from Bound?
Yes, this is a startup, and in fact, is still due to go live. But we're already thinking about the future, about what are the next steps of our innovation process. So let's take a small peek into what we plan for future releases. One of the upcoming features is a dedicated area within the Open Foundry app, where fundraisers can not only design their EU wrapper, but can also monitor investor subscriptions and corporate actions actually for their wrappers in real time. We are also exploring partnerships with distributors in the EU to expand the marketing reach and capabilities, ensuring that our fundraising clients have access to the best tools and also to the best services available. Our goal is to really make cross-border fundraising as simple, as efficient as possible. Additionally, we wish to embrace artificial intelligence as an enabling technology to optimize even further the customer experience for both capital raisers and investors, and to make our internal process more efficient. We also aim to create a truly borderless global economy for unlisted alternative assets, not only by expanding the distribution reach of, for instance, US underlying investment into the relevant markets other than the EU, okay, because this is a step one, for instance, the UAE and Asia, but we also want to allow a kind of a two-way street where also EU capital raisers could seamlessly raise capital in the US and in other financial markets. So think about an interconnected global economy where there are various bubbles, various financial markets, each with their own regulatory framework that can, though, interact in between each other, and there can be really a true global economy of these alternative assets. Lastly, as I was mentioning before, we would like to also expand the investor reach, at least in the EU, beyond only professional investors. We would like to go to retail investor to try really democratize venture capital as an asset class and to offer them the same choices that bigger investors have. Of course, this represents, as you can imagine, a regulatory challenge that must be thoroughly studied and carefully implemented. But we truly believe in opening up with the due precautions, of course, such investment into alternative assets to the wider public.
Thank you, Milo. It was very clear. Luca, based on your experience, what advice would you give to fund managers and startup founders considering raising capital from Italian family offices and wealth managers?
Yes. And from my experience, fund managers and startup founders looking to raise capital from Italian family offices and wealth managers should focus on several key strategies. Firstly, understand that Italian family office and wealth managers value transparency and efficiency. The traditional fundraising process can be cumbersome and opaque, often involving multiple intermediaries that add complexity and cost. This not only reduces costs, but also builds trust through greater transparency. Highlight how your approach minimizes intermediaries, thereby enhancing clarity and trust in the investment process. Secondly, emphasize the role of technology in simplifying investments. Italian and in general EU investors are becoming increasingly tech-savvy and appreciate the convenience and security that technology offers. So how your platform or fundraising method utilize cutting-edge technology such as blockchain for secure, immutable records or smart contract for automated, efficient transactions. This not only simplifies the investment process, but also provides a higher level of security and trustworthiness. Additionally, flexibility is key. By offering tokenized assets, for example, you enable fractional ownership, making it easier for family offices to diversify their portfolios without needing to commit large sums of money upfront. This can be particularly appealing as it allows for greater portfolio customization and risk management. Furthermore, personal relationship and trust are paramount in the Italian investment community. Take the time to build strong personal connection with potential investors, leveraging potential bonds network in EU, communicating with them efficiently. Engage with them through regular communication, provide detailed and transparent information about your business, and demonstrate your commitment to a long-term partnership. Lastly, be prepared to show how your business or fund can navigate the regulatory landscapes effectively. Italian investors are cautious about compliance and legal issues. Demonstrating a robust compliance strategy and a thorough understanding of the regulatory environment can provide reassurance and increase their confidence in your proposition.
Milo, could you give us a practical example or a success story of how US-based VC funds benefited from using this platform?
Certainly. Despite, as I was mentioning before, Bond is in the process of launching, and it will be available to the wider public from fall, autumn 2024. We have been operational for a few months and have already started providing some services to clients. For instance, one of our recent clients, a US-based VC fund, had almost completed its fundraising in the US, but saw an opportunity to differentiate its investor base and its marketing outreach outside the US. And however, the EU investors they had approached and who cherished the opportunity to invest in their fund found it too complex and not efficient to do it directly. And by using our solution, they were able to set up the right EU fundraising structure as required by EU investors in just a few weeks, and significantly reducing their cost. This streamlined process also allowed them to focus on expanding their investment portfolio and US operations to launch their fund rather than getting bogged down in administrative tasks in a market, the EU, they did not know very well.
Going back to Luca, what final thoughts would you like to share with our audience about the potential of this borderless mass fundraising platform, specifically for US-based VC funds looking to tap into the EU market?
Yes. In my opinion, solutions like the one proposed by Bond are transformative for US-based VC funds. Its ability to simplify regulatory compliance, reduce costs, and accelerate the fundraising process make it an invaluable tool for any fund looking to expand into the EU market. For Italian investors, it offers a seamless, transparent, and efficient investment opportunity. I strongly encourage US-based VC funds to reach out to Bond to understand if this can really be their go-to platform for cross-border fundraising.
Thank you, Milo and Luca, for sharing your insights and experiences and for introducing to the audience the concept of borderless mass fundraising.
Thank you very much for your time and for this platform. It was a pleasure to be here.
It was a pleasure. Thank you, and I enjoy sharing our experience.
Thank you. This concludes our interview. Thank you all for joining us today.
Thank you so much, Elena, Luca, and Milo. And this is my last speech for this week. I want to say thank you so much to Baibas Altuntas, Executive Chair of the World Business Angel Investment Forum and Global Chair of the World Business Angel Week 2024. And really, I have appreciated all the interview, all the really in-deep thought of our panelists, of our keynote speaker. And I am very happy to be with you this week, this year. And I am waiting you next year for the same week. Thank you again. Have a good day. Bye.